Welcome everybody. We have a big crowd here today to this investor webinar. I'm Zach Miller. I run the investor community at our crowd, and this is a webinar about the new rules on general solicitation. These are impacting the way the SEC is not only governing the way startups and investors can invest in them, but the whole entire way that startups can communicate with the investor community. Thank you all for joining us. If you can't hear me, there's some audio options as well on your meeting burner panel. You can follow those. You can click to connect with your computer, or you can dial in. The phone call is on mute. I'll be speaking. I will turn the call over soon to Jay Kalish, who's our general counsel, to give the majority of the presentation. But just a first disclaimer before we start. Like anything having to do with the law, there's a legal disclaimer. This presentation is for general informational and educational purposes only and does not constitute or purport to render legal advice or legal opinions. The material is intended but not promised or guaranteed to be current, complete, or up to date, and should in no way be taken as an indication of future law and practice. Transmission of the information is not intended to create, and the receipt does not constitute an attorney-client relationship between us. The opinions expressed in this presentation are personal views only and do not reflect the opinions of any governmental organization. You should not act or rely on any information contained in this presentation, both oral and written, without first seeking the advice of an attorney. Very sage advice. To start, so who am I? I'm Zach Miller. I'm the head of the investor community at our crowd. I have 10 years of experience focused on the intersection between social media, technology, and investing. My work at our crowd was preceded by running some senior positions at Seeking Alpha, which is sort of a next generation leading investment information portal. I've done some work at Covestor, SigFig, as well as Lending Club, which is one of the top peer-to-peer investment platforms. I'm an author of a book on the same subject called Trade Stream Your Way to Profits, Building a Killer Portfolio in the Age of Social Media, with some strategies on how public market investors can use social media as information, as an input, a major input into the research process. A little bit about our crowd first. We emerged as a leader this past year. Obviously, crowdfunding is a new field. We emerged as a leader in venture capital type crowdfunding. That's equity crowdfunding. This is not donation-based like Kickstarter. We've raised over $20 million in 31 plus rounds. We've invested in 27 companies. We've done a very interesting stat. We've done 7 deals over $1 million a piece, which is number 2 in the world after Kickstarter, and that's in front of Indiegogo, which is one of the leading donation-based platforms. What's important to us as well is continuing to fund companies. Our first investment. We've done 5 follow-on rounds, and as you'll see, I have a slide a little bit later, we've seen on average about a 2x uptick in valuation as we've done in just a matter of months. Bloomberg, we've gotten great press, particularly from Bloomberg. You can see this quote, that we unlock the power of the crowd. As crowdfunding, we're focused, our approach is much like a venture capitalist. We're doing full due diligence on the front end. We have a team here that reviews every single deal that we invest in. We put our own money in before we open it up to the crowd, and then the real work begins. We like to think of investing as a team sport, and then it's time to help our companies grow. And we're unlocking the web to not only to address the investment piece of the puzzle, but also to help grow and build companies. We combine two of the best of 2 worlds, essentially. We like to think that this is a better model, a better mousetrap. If you look at venture capital and what venture capital has to offer, their value proposition, it's exposure to top deal flow. We do top due diligence, right? So we have a team. We see over 100 deals per month at this point. Our team spends their time, filtering through those, curating those, finding the best of those deals, and then negotiating terms. We get professional terms for our investors, which include obviously preemptive and other types of rights. But we also combine the best part of angel investing, which is independence. It's not a fund, right? An investor has true discretion about what deal he gets involved with or not. It is do it yourself. We have lower fees than traditional venture capitalists. There's not a big upfront commitment, so no buy-in. We have $10,000 minimums, so we can, we address sort of, an entry-level player there, and as well as relative speed and ease. It's quite easy for us to post a new deal, and quite easy for an investor to come onto our website, do the research, and then actually click a button to make a first investment. Just a quick example of one company, to show how the process works and how our crowd is sort of approaching this as a venture capitalist. Argo Rewalk was one of the companies that President Obama met with when he was visiting Israel earlier this year. It's a bionic infrastructure for legs. It gets people who are paralyzed up out of a wheelchair and walking with relative ease. It's a backpack with some bionic legs. This person here is a woman from England, Claire, who actually ran in the London Marathon using this device. We invested in over $1 million in this deal alongside some of the top venture capitalists here in Israel. That's how we provide value as well. We participate next to some of the leading venture capitalists as well. We're global in nature. In the multiple deals that we've done, we've seen investors from over 19 countries participate. This is the global nature of the web, and this is obviously something that we're focused on here at our crowd. We've done 5 follow-on rounds, so these are deals that we made our first investment, and within a few months the companies were back raising money. As you can see in the right-hand column of the presentation, we've seen significant uptick in valuation in just a few months after we made our first investment. Typically, as we do later rounds, larger investors, more institutional types come in and invest alongside us, and that's an essential part of our model. I'm going to turn the call over now. We'll have an opportunity to answer questions at the end of this presentation. There's an Ask a Question button as part of your meeting burner panel. If you have a question for either me, Zach Miller, and I run the investor community, or for Jay Kalish, who's our general counsel at our crowd. Jay is an expert in all things legal. He is one of the renowned experts and probably one of the most knowledgeable people on the changes that we'll be talking about now throughout the world. And how do you like that for an intro, Jay? I'll turn it over to Jay. If you have a question for him as well, we'll try to address all of them at the end of this presentation. Just either submit the question via the chat function on your meeting burner panel or through the Ask a Question button. I'll end up the conversation. I'll tie things together at the end, and let me hand it over to Jay right now. Here's Jay.
Thanks, Zach, and thanks everyone for joining us today. As Zach mentioned, I'm general counsel. I've been here for over a year. I have about 20 years experience as in-house counsel and as senior investment relations professional for publicly traded companies. In my experience, new legislation like the Jobs Act really has the potential for revolutionary change in our industry. In April of 2012, Congress passed the Jobs or Jumpstart Our Business Startup Act to stimulate job creation in the U.S. by encouraging investment in private companies. It then authorized the Securities Exchange Commission, or the SEC, to promulgate the rules and regulations to implement the act. In July of this year, the SEC issued a series of rules which are going into effect on September 23rd, as well as a series of proposed rules to further this goal, which are currently for comment only and not in effect. While much of the Jobs Act deals with new rules for crowdfunding, I'd like to limit the discussion today to just one part of the new regulations, and that's the new rules on general solicitation and advertising. Historically, private issuers were not allowed to generally advertise or solicit the public in order to raise funds for their businesses. They could solicit from those investors with whom they had a pre-existing relationship. In certain circumstances, the SEC offers an exemption for private offerings if they are made only to accredited investors. Under U.S. law, an accredited investor is defined as either an individual with annual income of at least $200,000 per year over the past 2 years, along with the reasonable expectation that they will have a minimum of $200,000 in annual income during the current year, or if they have at least $1 million in net worth, not including their primary residence. There are different requirements for being considered accredited investors for entities such as corporations, trusts, partnerships, retirement plans, and the like. Pre-Jobs Act, under the old rules, an investor could self-accredit by simply making a declaration that he or she meets the standards of an accredited investor without any additional verification, and the issuer could rely on such statements. When Congress passed the Jobs Act last year, one of its main goals was to stimulate jobs in the U.S. economy by broadening investments in private companies. Certain rules issued by the SEC become effective on September 23rd and essentially address the general solicitation and advertising restriction. In certain circumstances, New Rule 506C will now provide that general solicitation and general advertising will be allowed. Keep in mind that only accredited investors can actually purchase equity interests under the rule, but startups and platforms like our crowd will now be able to market to a much broader audience. The rule also provides that self-accreditation is no longer sufficient and that issuers need to implement a verification procedure to ensure that the investors are indeed accredited. The rule will also provide for additional reporting requirements. Again, these requirements are currently in proposal stage only. Now let me review some of the key elements of the new rule. General advertising and solicitation will be allowed only in the U.S. and as well as in any country where the law allows this. These potential investors will now be able to see which companies our crowd and sites like it are currently funding, something that's restricted now to only accredited investors, and will be able to attend meetings with management of portfolio companies whether or not they are accredited. Our website will now be able to contain limited information on funding companies, with the limitation on information based more on the company's requests rather than on a legal restriction. Our crowd will now be able to make more effective use of our social media. We will be able to announce investment opportunities that are currently funding on our crowd over Facebook, LinkedIn, and other social media sites. Some of the proposed regulations in this area may include a pre-filing of Form Reg D, as well as the pre-filing of any marketing materials used in any solicitation. Issuers may also be required to place a mandatory legend on all marketing materials, essentially outlining the risks involved in these types of investments, similar to what is used when advertising public securities. The comment period for these proposed regulations ends on September 23rd, and current expectations are that the new rules will be in place by the end of the year. Regarding accreditation, the definition of accredited investor remains the same. But as I mentioned, self-accreditation is no longer sufficient. The new rule requires the issuer to have a reasonable belief that the investor is in fact accredited, and therefore each U.S. investor must provide proof that he or she is in fact accredited. This proof may include a certification that he or she does in fact meet the accredited investor standard. The SEC lists a number of non-exclusive ways that the person can provide the certification. The rule mentions a letter issued by a registered broker-dealer, an investment advisor registered with the SEC, a licensed attorney, or a CPA. The rules are still not fully clear on how often the certification needs to be provided. Currently, we are going to require that the certification letter will need to be renewed periodically on at least an annual basis. We will also require the investors confirm that the letter itself is still accurate and enforced at the time they make each actual investment. Another provision that the SEC has included is what they call a bad actor provision. Issuers can only use Rule 506 if there are 506 offerings if there are no what they call bad actors associated with them. A bad actor is what we think a bad actor is, someone who's been convicted of a felony or a securities violation over a period of time. The SEC has issued clear guidelines here, and it makes sense. They're trying to get bad actors off the street and as a result offer more protection for investors against potential fraud. Under the new reporting requirements, the SEC is proposing that Form Reg D must be filed at least 15 days prior to the commencement of any proposed offering. There is an additional proposal that will require an additional filing following the closing of every financing. The penalty for noncompliance is quite severe. The SEC has stated that in the event of noncompliance with the provisions of the rule, a company will basically go into the penalty box and not be able to make a Rule 506 offering for 1 year. This is a 50,000-foot view of the new rules as we see them. I think that the SEC has made a very interesting first shot at the rules, and we're going to have to follow carefully how the legislation how the rulemaking continues. And let me just take another minute to tell you about our crowd structure. Our crowd is a hybrid VC crowdfunding platform for accredited investors only. We have been operating under the SEC's VC exemption pursuant to Section 3C1 of the Investment Company Act of 1940, and we are in full compliance with both U.S. and Israeli law. We are also very careful about adhering to the accredited investor standards for every investor's country of residence. In summary, we believe that these new rules open up many opportunities for our crowd. It will enable us to expand our audience and continue helping our portfolio companies grow via a process we call crowd building. The rules will enable us to expose a larger audience of the United States to our crowd. On the legal side, this is an evolving area of law, and we will be closely following all of the SEC's announcements going forward. We intend to leverage these new regulatory changes, but will continue to take a conservative approach. That concludes my prepared remarks.
Great, Jay. I'll give you a chance to catch your breath. Thank you for that great overview. We had quite a few questions that came through just regarding the presentation, the slide deck that we're using today. We will make that generally available to everybody, either through an email or through a post on our blog. We'll let everybody know. You'll get a chance to review this on your own time. So that answers that. So Jay, if you have a second, we'd like to start the Q&A session of this webinar. If you do have questions, by the way, you can submit the question via the Ask a Question button on your webinar panel. So let's start with the first question that came through. What changes on September 23rd in regards to companies pitching non-accredited investors?
Well, that's exactly the point. Until now, and certainly in the United States, a company could not pitch a non-accredited investor and could only present before accredited investors. The way we were working in the past was to attend an event, you either had to self-accredit on our website or sign a form, a declaration before coming into the presentation. From September 23rd onward, everyone will be allowed to come into the presentations. And if they see companies of interest, then they will be invited to go up to our website and then accredit in order to find more information and then be eligible to actually invest.
Right. So if we're in the post-September 23rd era, which we're not just yet, you could theoretically go to the OurCrowd website and see the 5 wonderful companies we're funding right now. Since you can't do that, you'd obviously have to go to the website, accredit yourself on the website as well to be able to receive access to those deals. Next question that came through, Jay, does the change in accredited investor status, and there isn't a change in accredited investor status, do the change in rule structure also apply to non-crowdfunding investments, just general private offerings?
I just want to sort of stay where we are, but I think you're right because, again, we're not a crowdfunding platform per se. We are more of we're acting as a venture capital fund, and basically using a vision that John Medved had, we are starting a new structure for venture capital using elements of crowdfunding. So that's really what the difference is. So I guess really, if you're offering to the public at that point, you probably could do it based on the restrictions that the SEC that I spoke about that the SEC has promulgated.
So we've spoken from the perspective of a fundraiser, of a venture capital platform. What are Reg D filings in terms of startups raising funds? Do they have any different regulations?
Not that I'm aware of. Any company that's looking to raise money on the private markets, in order to be exempt from the SEC's reporting requirements, would have to file a Reg D. But again, I'm giving you this. This is a limited liability kind of statement, and if you're a startup company looking to raise money, I would suggest that you speak to your attorney before deciding what kind of filings need to be done.
Next question coming through, and there's a bunch. So if you have questions for Jay, please submit them through the Ask a Question button in the Meeting Burner panel. Can you clarify when the reporting requirements take effect? Does that apply only for companies that have used general solicitation in the past?
Okay, as I mentioned, there are certain parts of the regulations which are in proposal form. The requirement for the Reg D filings was a proposed regulation. The comment period for it ends on September 23rd, and the current anticipation is the rules will actually be issued by the end of the year. So if you look at the rules, they are only a proposal at this point. And the way they're phrased, the way that they're talking about it is that there will be a pre-filing requirement that you cannot offer unless you pre-file for 15 days beforehand. And there is a proposal of doing a filing when you close the round to provide the statistics of how much money you have raised and from how many investors it's been raised.
So we have a clarification question, Jay. We have one investor who is a bit confused. Who files the Reg D filing, our crowd or the company itself?
That's a good question, and so it gives me a chance to again review our structure. The way our crowd works is we set up a limited partnership to make the investment in each one of our portfolio companies. So in essence, what's really happening is our crowd investment in, Zach mentioned Argo, so our crowd investment in Argo LP is a limited partnership that is set up by our crowd. Therefore, we do the Reg D filing because in the end analysis, we are raising the money. The limited partnership will be the entity that makes the actual investment into the company itself.
Great, thanks, Jay. Another question came through from an investor. So from September 23rd on, is there a limit to the amount of people, accredited and non-accredited, that can get an offer to purchase equity using crowdfunding?
Under the rules, there's no limit to the amount of accredited investors. We have certain technical requirements since each one of our special purpose vehicles, our limited partnerships, are organized in the BVI, so there's a specific limit there, so we would possibly have to open one or more depending on how many investors come in. But the point is, as long as there's accredited investors, you're not limited in the number of investors. There are limitations if you use non-accredited investors and allow them in. We do not get into this. We only allow accredited investors to invest through our crowd.
So as a follow-up question, Jay, we have another question from an investor. So essentially, if I get this straight, the number of actual investors will not grow since only accredited investors can still invest. The new legislature will only increase ways of finding those already eligible investors. Is that correct?
That's essentially correct. But what we're saying today, we have about 1,700 to 1,800 accredited investors on our site. And what we hope to do now is using these new rules to give wider exposure to our crowd in the U.S. and thereby attract more accredited investors. The standard hasn't changed, but we're hoping through the increased visibility that we will have, that we will be able to attract many more people to our website.
I think what Jay says is right. I mean, as I said in my opening remarks, this is Zach, we definitely view investing as a team sport. What's going to happen now as investors, and we've seen this, is particularly investing in startups, it's a very social activity. When an investor sees an idea and looks at a pitch in the company, he wants to bring in his lawyer, he wants to bring in his accountant, he wants to talk to his friends in the industry, he wants to get expert opinion. In the past, unless you were accredited as an investor, those people would not be allowed to see our materials. Those people would not be allowed to see the analysis and the presentations that we put on our website. Post September 23rd, it brings a lot more people to the table in terms of being able to assess deal flow. Okay, enough of my pontification. Here's a question I can take. What stages is our crowd focusing on? As we said, we're a online venture capital platform. We've primarily done A rounds, so early stage companies. We're beyond idea level. Our investors typically like to see some type of traction. Traction can come in a variety of ways. It could be in sales, it can be in partnerships, it can be in beta testers, but we typically like to see some type of traction. As our crowd is growing, we've gotten exposure and we'll be doing more, I wouldn't call them later rounds, but a little bit more mature investments. There are a couple questions that came through in the chat function about our interest in specific companies. Definitely email me after the webinar. I don't want to address our interest in specific deal flow. What tools are you using to work around the self-accreditation since this is no longer allowed? How does our crowd propose that they're going to do that? I'm going to turn this over to Jay.
Well, as I mentioned, what we're going to do, again, this applies with the SEC rules, We'll ask an investor to state that they're accredited, but then what we're doing is that's not enough, and what we will do is we have a form that we will be providing every investor when they're looking to invest in a deal with us, that they will have to have completed either by a registered broker-dealer, a registered financial advisor, a CPA, or a lawyer, which will attest to the fact that they do in fact meet the criteria of accredited investor. That might mean that they would have to furnish certain information, such as tax forms, brokerage statements, and the like, in order for them to ascertain that that standard is met.
Great. A lot of questions coming through. One technical question, someone asked, they're having trouble seeing the chat function. Safari and Firefox should work. I use Chrome. Chrome works as well, but maybe just want to refresh your browser. So an investor, Jay, asked a question. Well, do these RISE rules apply to company-issued debt as well as equity? And I don't know if we necessarily know the answer to that question. We believe it's equity at this point, but we're going to move away. Ask an attorney. Another question, can a private company have an unlimited number of accredited investors without triggering a public company requirement?
Yeah, that's the exemption. That's what we were saying before. That's the exemption that's offered under 3C1 for private offerings. I don't know the exact numbers, and I'm not going to give a number here, but the point is that there do not seem to be limitations as long as you're accredited. So that already limits the amount of investors that could come in.
Okay, great question, and this is the million-dollar question. We're just waiting for an investor in the community to ask it. Will our crowd eventually open up to unaccredited investors as allowed by future regulations? I'm not going to talk about what we're doing in the future. Right now we're focused on a specific segment of the market, and that is the accredited market, and we do that for three reasons. One, because it was legal and is legal right now. The other is that it's, as a focus group and as a community, it's a very large market for us. RBC mentions that there's about $45 trillion internationally in high net worth investors, 10 trillion in the U.S. That's a large market for us, and that's one that we think we can grow with. The third, and if the SEC eventually opens up investing to non-accredited investors, we're going to watch that closely. But we're focused on investors with a little bit more sophistication, investors who understand the need to build a portfolio, particularly in this type of risky investing. For that reason alone, we created what we call a portfolio reserve. This is automatic portfolio building where investors give us a sum of money that we're going to allocate over deals. We also have a high minimum, which is $10,000. Other platforms are focused on $500 to get in at an individual investment. We're focused on a little bit higher end in the market. That's our philosophy. You don't pick one stock. You want to pick a portfolio of multiple stocks. You definitely want to see 5 to 6 companies. That's what the data shows. If you can get 10 to 12, that's even better. What sophisticated investors understand is the fact that for every dollar that you allocate to a deal, you probably should leave another dollar in reserve for follow-on rounds. We're starting with that market. We don't know what the future is going to look like. We're building the business for long term. We're building a platform. We really have developed our own internal software to manage this process. And we think that's the right place for us to start. We don't know what the future will hold. So I hope that answers your question by not answering it. Jay, here's a question for you. For non-U.S. investors, will self-accreditation continue?
The standard for accredited investor or its equivalent varies from country to country. The standard is fairly uniform throughout the European Union, but many countries have different standards. For example, Australia has always required a letter from an accountant attesting to the status. It's something that will keep changing, and we obviously monitor it. We have a file that we keep building. As we come into new countries, we have to basically thoroughly research each one to make sure we understand what the accredited investor standard is in that particular country. So it's an evolving process, and we watch the countries that we are bringing investors from very carefully.
Yeah, Jay's actually understated some of the work that he and his team have done. They've become global experts on local securities law, and accreditation status varies obviously depending on the company of residence. Here's a question, a more logistic question. When will you post the form which broker-dealers, attorneys, and CPAs need to sign to certify the status of investor as an accredited investor? Here you go, Jay.
Okay, we require this at the investment stage. So what we are doing is when we send out the subscription documents, we will be sending that form out as well. If somebody wants to obtain that form beforehand, feel free to contact us and we'd be happy to provide it to you.
Another question from the Q&A panel that I see here. How does that ruling impact on deals going viral? I.e., when would an out-crowd investor be able to share it with more of his people, friends, / social graph and grow from 1,800 to 18,000? Would their friends have to be accredited investors to see the deal?
Well, that's the point. You can go ahead after September 23rd. An investor wants to come meet with a company. They can bring his friends. That's exactly the point of the viral nature of what the SEC is proposing. Again, with the limitation that only accredited investors can actually invest. Keep in mind also that we're talking about earlier stage companies, and not all of them are particularly ready to expose themselves to the general world, and they want to keep things under wraps. So that's a tension that we have in running the business, and will be acutely tuned into both sides of it.
Hey Jay, here's one that I don't know if you're going to want to touch, but do you see Israel ultimately adopting its own version of the Jobs Act?
It's a question that I won't give an opinion on right now. I know that the Israel Securities Authority is reviewing a lot of regulation in this area. There's an understanding, obviously, since Israel is so central to, there's just so much on the startup side in technology. Startup Nation is the second leading provider of early stage technology companies in the world. So I know that they are reviewing this, and there are different discussions going on. There is the Israel crowdfunding organization. So it's yet to be seen what's going to happen, but we know that this is an issue that they are looking at.
Great answer, Jay. Another investor question here. Can international retail investors participate in VC crowdfunding campaigns under the Jobs Act, even though those international retail investors are not accredited investors?
Again, we will only accept accredited investors if they meet the standards in their country of residence. We will not. This is a country-by-country situation. I hope if this is the question you are asking, this is the answer. We will only work with accredited investors, and that definition will keep varying. It's more interesting if you have a U.S. somebody who's dual citizenship, who's a U.S. citizen but lives in Israel, will have to use the Israeli test for accredited investors. Again, it's a local residence test.
Here's an interesting technical question. For an investor who's already pledged, already committed, though hasn't yet invested in an out-crowd opportunity, will that investor have to prove the accredited status going forward?
And the answer is probably going to be yes, because anything that we close after September 23rd is going to require that accreditation. The way the SEC is going to be working, the way we're building our compliance program, is we will have a separate file for every deal that we do. And every U.S. investor who will be participating in that deal will have to provide something on accreditation. And this is the way that we are going to be running it. So anyone wants to audit us, they will be able to see that everybody's accredited. So we're taking a conservative approach, and therefore if it's still an early deal and we haven't finished funding, it's a very good possibility that we're going to have to do that.
Jay, do you know if the accreditation standards are different if you're investing through a living trust as opposed to investing through an individual status?
There are different rules. I haven't gone into them. That you'd have to look at the accreditation rules under the latest pronouncement, but there are slightly different rules. We're actually developing a form now to address this issue, and once I have that, we'll be able to offer that as well.
Okay, we're getting to near the end of our questions in the Q&A session. Jay looks relieved. If you have any final questions, please submit those now either through the chat or through the Ask a Question button on your meeting burner panel. Just to clarify, there are a few questions in the Q&A about the type of companies that we're focused on in terms of our investments. We do early stage, but obviously that can mean a lot of different things. Early stage company in Israel might be early stage in the U.S. It sort of depends. We don't invest in idea stage companies. We do invest with companies that we'd like to see some traction. We'd like to see a formidable team, some sponsorship, either through a board or through some relationships with external companies. So we are looking at early stage companies, but again, early stage has a variety of different meanings. An investor asked, can 401k funds be invested? Do you know the answer to this, Jay? Jay is shaking his head. He doesn't know. I know a few people asked that question. I think that's going to be an interesting question to sort out going forward. Last question, Jay, and we'll let you go. Can you just review one last time what is certain to take effect on September 23rd, and what is still in the proposal phase with the SEC? Here you go, Jay.
Sure. On September 23rd, general solicitation and general advertising will become legal, and we will be allowed to do that. On September 23rd, going forward from September 23rd, accredited investors we will not be able to rely simply on self-accreditation. We will need to have an accreditation letter from the different parties that I mentioned earlier. These are the rules that are going into effect now. I'm sorry, the bad actor provisions are also going into effect now. What is not going into effect and what's under consideration is still the reporting requirements for Form Reg D, whether it has to be a post-filing as well as a pre-filing. The pre-filing of any marketing materials and the introduction of a legend on any marketing materials for these kinds of securities. Those are the latter ones I mentioned are the ones under proposal. And again, we have to watch and see what happens after the comment period closes and when those rules are actually promulgated and put into effect.
This is Zach Miller. I'd like to thank everybody who's taken valuable time out of their day. We had a record number of people join us on this call. I hope this was valuable to you. We'll make this presentation available to you. As you see in the slide that's up there now, Jay and I both have our email addresses there. Those are personal email addresses. Feel free to reach out to us if you have a specific question. Some questions we'll be able to answer, at least how it pertains to our crowd. Larger questions, you may have to go to your local council. Again, our crowd is the leading hybrid VC crowdfunding platform for accredited investors only. We're operating under the SEC's venture capital exemption in full compliance with U.S. and Israeli law. We've funded 26 companies to date, raised over $20 million for portfolio companies. We've been primarily focused on the Israel opportunity, which is a startup nation. We will be expanding internationally. We've made that known to everybody. So you will be able to start to see local opportunities around the world. We do have investors from 19 countries to date that will be expanding, and hopefully we'll be expanding that with deal flow with local deals as well. If you have any questions, feel free to reach out, and hopefully we'll see you on the OutCrowd platform. Thank you, guys. And this concludes the OutCrowd webinar.